Earlier this year, we issued our 10 Themes report, which looked at a number of topics that we felt investors should consider for their investment portfolios in 2023 and beyond. I'm joined today by Mike O'Sullivan, who's going to explore one of those topics in a bit more detail, and that is geopolitical risk mattering again.
We think geopolitics matters to investors for a whole range of new reasons. We've effectively come to the end of globalization and a long period of collaboration between nations. And we're in this strange economic environment now where investment is becoming politicized. High-tech sectors like semiconductors are now infused with geopolitical risk. Also, we have all of these flashpoints around the world: North Korea, Iran, and of course, sadly, Ukraine. And these are becoming more acute. And then to bring it all together, central banks are stepping back from providing liquidity to markets. Markets are that bit more fragile, so they're more sensitive to geopolitical risk in commodities, in currencies, and then more broadly across markets. A really telling example of how political risk can impact an individual economy and financial markets is Turkey. It used to be a fast-growing economy full of a young population, but in recent years it's become more authoritarian. Lawyers, teachers have been put in jail, its institutions have been devalued, and you see the effects of this on its currency and on its debt markets, both of which have shrunk. So it's an extreme example, but I think a reminder to many other economies.
If we're looking at a client's portfolio, we need to be mindful of how geopolitical risk can impact the return profile and ultimate volatility within the portfolio. For instance, if we're looking at trade tensions between the US and China, that can have a significant impact on a client's portfolio, especially if there's a particular tech exposure there. We also need to be mindful of the ongoing conflict within the US and Russia. For instance, within, I suppose, a client portfolio currently, clients will have very little or no exposure to Russia. However, they may well have a significant exposure to the US. And we have to be mindful of how this conflict impacts certain macro factors like the US dollar and inherent interest rates within the US, and ultimately the impact that they have on the exposures and the portfolios. One other item that we are cognizant of is opportunity cost. And what I mean by this is, if we look at the opportunity cost for some of the more indebted nations as to how they use their resources. Some may use their resources to increase their defence spending at the opportunity cost of spending more on education, healthcare and infrastructure. And this may ultimately have an impact on the longer term economic growth for those nations. And in turn, from a client's perspective, the return profile that you could attain from investing in such exposures. This is another idea that we're cognizant of when we're designing portfolios.
Thank you, Jer and Mike, for your valuable insights there. We hope that provided viewers with a thorough understanding of the topic we discussed. Here at Unio Wealth Management, we're very happy to provide you with insights into themes and topics that may help you make informed decisions when managing your investment portfolio. For further information, feel free to speak to your financial advisor or visit our website www.unio.ie.